So I want to talk about some of the setups that were presented to us on the charts, what it was that I was looking at, and how the levels were identified. You guys remember all of this stuff is coming back from a few videos ago, a session, a bootcamp session we had when we were up here around somewhere here, and we were looking at this level to come back to it, and we finally had a hit today. And it's a beautiful setup, so we will review step by step about what transpired at the top, what caused this. Now, the interesting part is that we have simultaneously, as the price dips, we have news, Bitcoin news websites coming in and saying that, you know, Turkey bans cryptocurrency, citing risk concerns. Meanwhile, the risk asset in Turkey has been the lira. And the lira dropped really hard, then it bounced up a little bit. But overall, you know, it comes at a time when people are converting and are opting into to have new forms of money available to them. And it's quite funny because the websites, they have these headlines which prompt YouTubers to speculate and call it as that. And like, oh my goodness, Turkey bans crypto and Bitcoin, causing it to drop. And I'm here to show you that technical analysis is superior, and some of the things here that you will see are can be identified before the actual event happens. Because a headline grabber, you know, people need to compare the chart. They instantly open up the chart, look at the 4%, 5% drop. They look at the news, and then right after that we have a second wave of news coming in, and this time it's what was it? Something about China mining, hash rate drops, Bitcoin is dead, hash rate is dead, Bitcoin is dead, so Bitcoin collapses. So on the back of these news, we're looking at this chart, right? And meanwhile, I have no idea about what's going on out there, because these news articles, they start pouring in the news channel here. That's the only source of information that I have regarding the state of the network and Bitcoin and speculation is the news channel here. Believe it or not, I have no other sources to know how the space is developing, because all I'm interested in is patterns that can give me movement, regardless of what it is. And it so happens that there's a very clean, perfect setup here. I was actually going to call a short, and as this candle was setting up, I was going to go in, and you see this little thing over here, this blue box. This was my short box, my sell box. Unfortunately, I was late to the screen by 2 candles. So right around this point, I thought we were going to bounce here a little bit. This line was curving up. I should have known better because VVS was dying here, but I thought that the delta would curve up and basically allow this price to bounce, fill this box, and I was going to call a short and say you put your stop loss right here on the wick. Now, if this was an inverted chart, the 2 rules that we know is that when you have a bottoming out, a rounded formation, let's pretend that this is a long chart, okay, and we're looking at something like this. This is bullish, so we have a bull pattern, so that would be a flag if this was a bullish setup, right? We have market enemy setup, aka retest of the lows here, right here, where our entry would be. And then we have the wick in the vicinity here, which is this right here, is where our stop would be. There's no other place to put a stop that's untouchable, that's not going to get triggered in case of anything. So just like this wick over here, just like this wick over here, and this wick over here, we can see that these are great stop areas. And the only problem is your entry, if defined by the stop, would be it's blurry. The screen is blurry. I'm recording it, so don't worry about it. It's we're gonna review the recording later. Let me try to Maybe drop down the frame rate a little bit, like this. Then we can see a little better. So if this was a long setup, surely we would take it. We would take a long setup like this, no doubt about it. But it was a short setup, and the same thing applies. And I guess what I'm trying to say here is that so these news coming out, and Bitcoin dips as this and that happens. Bitcoin dips as that and the other happens. And that's simply not true. So you have a rising wedge here, right? And we've been waiting for the setup. Now I will tell you about what happened here and how my initial buy order was set in this box. And I'll also tell you why this box was not ideal and how it turned out to be a greed box. Now we refer to these as greed boxes when one side of us comes out and wants an immediate instant gratification result, and so we start to modify and bend some of the rules that were introduced with MarketSpy. And the rules state that when you have a market enemy type 1 setup, you need to place wick to wick measurement of your setups. So in this case, this is the greatest wick. There's no wick here yet. I moved my box to here somehow because this distance. Now, these triangle squeeze patterns, they happen in stages. Now, the first stage is a quarter of it right here, and the second stage is here, and the third stage is the base, and a bonus worst case scenario stage is the pole that comes with these squeeze patterns that can actually produce like a continuation move. So one was posted over here, and I thought that this would be a great area to go long in this box. And it was, because you were instantly given not once but twice. If you look at 15, let's go to 15. You had the initial fill here. It jumped up. There was a resistance. You had to sell. There's previous resistance at this point right now here. And previously just basically in this cluster of candles here. So that happened. Then you had a dip again, and it went up, and you could have taken profit. Then we had another dip, and it kind of went sideways multiple times. You could have milked this box a little bit. Now it looks like it's not much here, but actually these are all multiple 500-point moves. 1, 2, 3, and one little move over here before we had another spill. Interestingly, looking at all this, so while this is happening, so we have the measurement, right? And we're measuring, and we're waiting for a setup while publications are busy producing articles that they're going to hit send and release to the internet, where what will happen is that you will have massive volume candles, the biggest one of them right here at the bottom of a move, down move that started from here. So you see where the stop is? So ideally, now we also had diamonds and a whole bunch of bearish signals here, right, contributing to the pressure. Dying momentum here that wasn't looking really healthy. Okay, but at the same time, the setup here is that I want you to all take notes, and if you watch this video, which is being recorded right now, okay, I want to make sure. Let's understand two things, okay? Let's understand two things. So number one, I'm going to overlay with my highlighter here a simple triangle like this. I'm going to draw a pattern which can be represented by price moving up, correcting, and continuing moving up, or price moving down, correcting, and is range bound and continuing to go down. It doesn't really matter. It doesn't matter which side of the trade you're looking at. The number one rule. So once you have your leverage understood and what that means for your account, and how frugal you should be with borrowing other people's money in terms of leverage, it becomes very easy to not worry about this. I'd like to remind you that this setup here only took one red daily candle. That's it. One daily candle. Yet today we had a lot of people who got trapped in some of this price action, which is nothing. Imagine next time you're going to be facing a candle that is 20K in size on a 4-hour time frame. What are you going to do then? So this one little drop on the daily chart where we had one little candle, and it's not even that big of a candle. This is nothing. It's so clear here, and it's measured. So the total measurement for all of this then came from this. This line over here extends from the base pivot to the top pivot. That's the whole move. So this is your pole. If we bring this thing down here at the breakdown point, how do we know this is a true breakdown point? Let's get back to this pattern right here. The point is, this dot here that I shared in the platoon, we had a perfect setup, and a lot of us, we took this trade right here, right? And we made all this money by waiting and skipping all this money. So it's pretty much the same. If you went short, you're in profit. If you went long, you're in profit. But all you had to do was be directionally correct in your assessment. Let's take a look at this pattern here, and let's assume this is price. Ignore everything around on the chart. I just want you to focus on the yellow. Rule number 1. When you have small flat candles with massive volume coming in, and by massive I mean anything that goes above the moving average here, the water line as we like to refer to it. So right here on the volume bars you have a water line, and sometimes what you will find is every once in a while a candle will peek its head above the water level after a down move. So after a down move, when you have a candle that shows a little bit of volume like this, and prior to this volume candle we had red volume. So that let's say this is green volume, this is red volume, and the red volume was a candle from somewhere here pushing down, and it's the biggest of them all. This is where the majority of the, I'm not going to say that word because I respect money. There's no such thing as dumb money or smart money. Smart people lose money all the time, and dumb people make huge killings all the time. So there's no such thing. It's all money. But the majority of traders would actually sell at the bottom of the range. For us to know this, we do volume analysis, and we do it different from pretty much everyone that's out there who overcomplicates these things and then makes it sound sophisticated because they want to prove something to you, they want to convince you. My goal here is to show you things that have worked and have been very useful tools in professional fields off of trading floors, and what do discretional traders look at to assess market behavior. So when price goes up, and everyone can't believe that it's going to go up, it's going to go up, it's going to go up, they have a volume spike, and that's their confirmation. 99% of people will long on this candle, and yeah, this candle will actually overextend, but this is where you get out of your position if you're long from here. So basically, instead of drawing all this, think of it this way. Buy volume, green candle coming in from the bottom, that's good. Small buy volume coming in at the bottom, that's good. Big sell red candle coming in after a down move at the bottom, that's good. You want to be buying. Now regarding the top, huge candle pop, huge volume, that's bad. Okay, the majority of cases that's really bad. Big red candle volume bar at the top, small red candle, that's good because price is going down. This is smart people selling here. All right, very few. So you're going to identify those guys by looking at volume, and I'll show you how. Then they can't believe it's falling. 3 L's. L1, L2, L3. This is where the most volume comes in at the bottom. A lot of money gets exchanged, price reverses slightly. People think it's not a real bounce. Is it a real bounce? Is it not a real bounce? Is it a real bounce? The reason we're guessing here is because we haven't mapped our levels. Because if this bounces and you have your mapped levels in advance, you know that this is real. It's not just an empty chart that you're looking at and you're thinking visually, did it really bounce or not? Before we look at any of the indications on MarketSpy, we can look at this channel. So we have a channel. So we have a pattern. We have a squeeze pattern here going up. As you can see, it's a triangle. And we're squeezing, and we're now in the lower half. All of our charts are split. All the squeeze patterns are split by a median line that shows us where price is inclined to go down or up based on where it is in terms of the squeeze. Where is the squeeze taking us in terms of the median line? And so once we cross the median line and we trend down below, we start to look at volume, and you can see flat range. This volume spike was very interesting. Let's highlight this candle. All right, it got countered a little bit. Flat range, second volume spike that is also coming in, and it's also interesting because these are small tiny candles, but now this one is closing below the squeeze pattern. And then we have follow through volume coming in, and you can't wait for that. These two candles here, 1 and 2, if you're going short, is what you rely on. You look at volume. Once you identify volume and see that there's some stronger overall selling activity in this range of candles here, in this bear flag or whatever the flag, we don't know what kind of flag this is until it actually happens. Once you look at that, you say, okay, there are sellers stepping in and they're taking over the buyers here. So the buy volume that pushes up is not dominating. You can agree with that, right? You can see how the red candle is sticking. Remember, when you have a bullish candle like this that sticks above the moving average here, remember that we've been going up and suddenly there's a spike. It's fake. It's 100%, 1000% fake, and it's the stupidest reason to confirm. I don't care if you have a blue dot, GPS dot, whatever the hell is going on here. We've been going up, and at the last phase you have volume coming in. That's not a good look. All right. And mind you, we're coming down off the highs, correcting up, only to continue down. So we have identified a possible projected price course here for our instrument, Bitcoin in this case. And so these two candles here are very significant in terms of what the volume is telling us. We do not wait for volume confirmation like what you have learned elsewhere. Now, as a result, I really appreciate it when you guys share your setups. And we had someone I'd like to turn your attention to, if you could go to the trade setup review, and we had TXELU had a little freak out there, and they say, hi guys, I need some support for you to cheer me up. Don't cheer anyone's mistakes up, all right? That's not good. We celebrate our successes and we learn from our mistakes, but we don't, it's not our job to say, oh, it's going to be better next time. No, it's not going to be better next time if we ignore all this. All right, this is very important. It's not an honest mistake if you hold on to it. Now, in that trade, in that particular trade, TXELU, I can't just say that name together because it's just Texlu. Anyways, they went long here. Like they went long on this. Oh yeah, this is the volume confirmation. Look at this. This is perfect. Okay, so this volume confirmation happens when we're going down, correction, volume coming in. That's fake. That is not real. Now their reasoning was there was a blue dot. I have said it 1,000 million times in a lot of the videos that the blue dot is not an indication of a Mag7 setup. It's just there to alert us that it would happen. Now I'm looking at a 15-minute chart. They were looking at, I don't know, on a 15-minute chart, you had your blue dot right here. That was your Mag7. Good trade setup. Tail end of the red. Long-term trend flow. Bullish blue dot. Yes. But they were looking at a consolidated 30-minute setup, and a 30-minute candle was this. Or maybe it was 1 hour. I don't know what time frame they shared there, but it was basically one candle with a blue dot here, for no reason, and there was a lot of volume on that candle, and so immediately question: why do we have so much volume, and why is it going up when we're clearly trending down? This is a downtrend, right? Off of the highs. When you have a candle that volume increases right here, right? This is your short signal. So your entry, your take profit candle is, we're looking at 15-minute time frame, right? So we're not looking short here, exit here. That just doesn't work, because what could happen is you go short, price goes down, prints a doji, shoots up, you're done, and then it starts bleeding down like this. All right, you have seen this kind of play before. So your entries here, shorts are amazing and everyone is attracted to them, but they're devilish because they're very evil, okay, for the lack of a better word. They are precise, they're short-lived. You don't have the speed necessary to quickly assess, react, and take profit, because greed takes over and you're like, I'll hold a little bit. You cannot hold shorts unless it's a 1x, and the minute you enter, you have to, that right moment when you went short here, you have to put a stop loss at break even, at your entry, not above over here or over here. If you're just hedging against a potential downfall and you would like to save some of your Bitcoin so that it doesn't lose value. So if you can time it, if you can find and analyze all this, you do your homework, you'll be rewarded very fast. Now that also gets taken away just as fast. So price creeps down. Uptrends, when we have little crawls like that, right? They're very consistent. So they're just going to move directionally very slowly, and two things will happen. Every tiny little dip here will freak you out, and you're gonna think is the top, is the top, is the top. But what you have to understand is, to identify your level like this, first of all, in the platoon we assessed that this right here was what we call a vortex that's left a tail. And a few days ago here, for the crowd that's not in the platoon, in the pit voice, we drew this together and we said, we're going to come back to this level, and when we do, we should be able to buy some of contracts here so that we can sell them higher. How do we confirm that this vortex is actually legit? First of all, this method of key level identification called range vortex is something that I have talked about here, and it's quite in-house. I don't think anyone else has it or understands how it works. So we're going to get into the dynamics of this price behavior and why does this happen, and why most traders would go on the wicks here to take out the stop losses, but that doesn't happen. The market does not give you that opportunity. And a range vortex helps us be on the same page with market makers and other participants, smart participants, who front run levels, obvious levels, where the majority of traders are sitting and they're going to miss all the moves all the time. So we have our vortex, we have a tail, we have a path of support. We identified it. Here's our dot. Then we need to figure out how do we get there. So imagine drawing this here days ago, and this took 3 days and 6 hours to complete. So you're setting up for a setup, and you're thinking, okay, once this is done and you project it in the future, you say, okay, from here on, I'm going to buy this level. I'm going to make a little bit of money here. Okay. That's what I'm planning on doing. Now, you obviously you're going to trade here. You're going to look at the setups. There's going to be little patterns within at the top. But ultimately, for the sake of today's setup, obviously you trade what's right in front of you. And what we have right in front of us is this particular situation here that was mapped days prior. Just like all of our other platoon setups, we look for them in advance and we just wait and sit for it to come to us. Today was no different. But how do we get to this level? Well, for that we need to identify a pattern that's powerful enough to allow us to go down to those levels, so that we can participate and purchase some of the contracts that will be available to us there at this price. So luckily for us, we have a squeeze pattern here, a triangle, a rising triangle that's pointy up. We're trending in the lower half of it with momentum pushing down. So this is a 1 hour chart. There's not much noise like on the 515. So I was strictly working on a 1 hour. As a matter of fact, the take profit point here was the 6 hour ATR 2x. So that's $1,200 up. Let's see if we actually made it. Yeah, we overshot that. So 2x 1 hour ATR, that's your take profit target. Now, it squeezed, it broke down. First level, my logic here was, there's a pyramid here, market enemy setup 1. All right, ME1, market enemy type 1. And type 1 says that we draw a box on a major wick to the next lower wick after we get a pyramid print, because that means within the next few candles we will be getting our fill, or it will take a few days and then eventually we're going to come back to that precise level and we're going to get a fill, sweep and reverse from there. Here's the problem. I went and placed my initial batch of orders here because I thought that usually what happens on the squeeze patterns is when we break down, and the market usually never makes it easy for shorts where they can just short on a spill candle and just have it their way and it continues down. What happens is that you have a spill aggressive candle that we learn to buy. It's scary. And there was volume here. And so I placed my initial ladder here, which was a nice little fill. And instantly we got about 300 points. And in the platoon, I asked my traders to exit that particular trade because of this box. We're not sure. But I was thinking maybe if we stay here for a little while, there was a divergence on the 5 minute. Fine. And maybe we would go up and scare the bears, hang here for a little bit, and then continue down. So I have seen a lot of times where Bitcoin would spill, print a doji like this, and it instantly go up, only to then just slowly bleed away, create some volatility shock, and then go down. So that was the thing that convinced me that this was a good box, and it was not. I ignored the rules of the system, MarketSpy, which tells us we must find a wick. We can't make our wicks and say, I think this is a wick. Squint your eyes right now on the chart and tell me what wicks do you see here. I only see one. This one right here. Literally, I only see one wick, and no matter how hard you try, you will not see any other wick. What does that mean? That means for the pyramid market enemy type 1 setup, post squeeze event with confirmed volume at the top, sell pressure going down, which is good. It's a solid signal. We want to look for that entry. We place our box at the wick. down to the next wick, which is nowhere to be found unless it's this wick. So, which means it's going to get magnetized to the vortex tail over here, the extension of the vortex neckline here. Most likely it's not going to stop based on the market enemy setup just because they're wicks. It's going to overshoot. So we place our box from this wick down to the lower end of this box. But since it's such a high probability potent magnet, why use market enemy type 1 wick here when we can just say, yeah, maybe I'll buy a few contracts and keep adding as price goes down little by little. But ultimately, I'm going to throw like 10K, 20K contracts right here, whatever the case may be, right? In this box. Since if it's shared in the platoon, then I have extreme confidence in the setup. Otherwise, I would not share it. If I don't see anything on the charts, if I'm not sure of price action, it would not be there. But if something pops up and I say it's time to go long, then it's likely that it's a very good reason. I'm not saying that you should copy and do the exact same thing, but I'm saying, well, for the platoon people, that you should double check with your system, MarketSpy, and see if it confluences with your own understanding of what you're seeing versus my idea that I might share. So, but we have identified that level. Now, if that was the case, it doesn't matter if you got filled here or here or here. If you cast a ladder here, you're instantly in profit just like the rest of us today. Do we have to wait for all this? Yes. I started my day and I kept coming back to see how the chart progresses. And we were just about somewhere on this candle here. I cast a little short ladder here and I never got filled and it spilled. And so obviously we don't chase candles, so I had to wait 9 hours, so all day today. And 8 hours to 9 hours is how long it takes cycle to cycle to actually for us to go down. If it's been going down, wait 8 hours and then start looking for a setup right there. The best 30 minutes you can spend with your chart is from the peak of any major pivot 8 hours later. This is going to end either 8 hours from now. This is going to continue to trend to our key level right here, and it's going to end in 8 hours, and then we might get a correction and have another 8 hours going up. But I think there's a high chance probability that we might actually revisit this peak over here. So we'll range, but ultimately going up in the direction. You have a squiggly line posted over here, so it's going to continue to be the case for a little while. And yeah, nothing is going to change that. It's very easy to identify a level like this, but using a market enemy setup, that was number one. Using our measurement of the potential distance, this is the only way that you can measure it for sure. And if it confluences, if it finds an agreement somewhere at around this vortex that we drew. Now this is a 3-day. Remember, I clearly stated that we had a 3-day consolidation here, which means it's very strong support, and it happens to be a very clean setup as well. We call range volatility vortex, RVV. When we had a squeeze and a push out of there, it's a strong break, void area that can get run and will get run until we retest this again. So this is a high probability setup. MarketSpy agrees with it, GPS dot agrees with it, VVS agrees with it. Everything is setting up for it to go. But the number one thing, let's get rid of all of this. By the way, Armageddon, that's another story. That thing was, it just took over here. So how, if you made a mistake, we're going to talk about making mistakes here, and MarketSpy is not open to interpretation like other indicators where what I think and what you think while both of us are looking at the same thing, are drastically different. It's the same thing. It's just how you're going to size and play it is what's important. It's not about where you want the price to go. It's about what's right in front of you. And MarketSpy shows us all the exact same thing. Now, combined with what MarketSpy offers us as traders, we can also pick up on a little tiny little things that make a big difference that most other people don't pay attention to. So let's review our volume bars. When we approach a level, so chronologically, first you draw your patterns, your levels. You identify, you play with the charts, and you set them up. Don't overcomplicate and draw like, if you start doing this, you're gonna go crazy. If you connect like these two pivots over here, then you're gonna take this and you're gonna say, oh, there's another one over here, and if I extend it, then wow, it makes sense. This is where I go short because it broke down. Oh, maybe there's a bigger triangle here, and then you're looking at this and you're like, but what about this one and here? Like, this is, yeah, this is it. Oh, is that a channel? Hey, look at that, from here to here. Wow, I have identified a perfect channel. We're in the channel. No, you're not. You're not in the channel. You're not in any of this. You have a short-term squeeze pattern that moves the price towards a flat horizontal level based on the most liquid, highly traded area days prior. A liquidity where demand sits. And a bounce where everyone is terrified to do this. Why? Why is this not going to stop? Because of these red candles happening at the bottom. It literally, the greatest candle from all of these, unfortunately, is this one over here. That got engulfed, and now we're going up. There's a lot of people who went short into the damn support that we have identified days ago and said that this would happen. So a setup like this, you get at least once every 8 hours or every day. So today we had a trade for you other guys that are coming in onto this, and 8 hours later you're gonna get another setup, either down or a continuation. But I think a continuation for maybe 10 to 12 hours before we have another correction and a follow through. So we will see never forget, long-term trend flow is still just entering the red, but it's been happening from here. So it's ready to exhaust. So we will see if we have that curvature and it takes us up. We will see. We're not there yet, but you have to keep that in your mind. So volume is very important. At the bottom, a lot of suckers just shorted and sold. At the top, no one dared, and you have volume going up at the top. A lot of suckers bought and long Bitcoin here. So let's not be suckers, because this market is a trap. It wants to sucker us all. It wants to, but we can't let it, because we need to identify. We need to be skeptical as heck when we're looking at charts. Now, you see this wick over here? You know that's the smart money there. You know, if you have a stop here and you long anywhere, it doesn't matter, because you're not getting stopped out. There's no such thing as you can come to me and say, oh yeah, but that's ignorant. Like, how are you gonna, you know, so you're gonna make a $50 move and take profit, but if it stops you out, it will not stop you out, is what I'm trying to tell you, because you will be out on the next few candles, 2, 3, 4 candles based on the ATR value, without having to risk your whole account to wait and hodl. And then you can move your stops. Then you can wait for the next wick, which would be produced somewhere in this range, and you can move your stop up to there. So I guess what I'm trying to say is that the market is tempting us to, in traditional trading, the damn videos that you watch, educational videos, or traders, 99% of them would tell you wait for confirmation. Volume on a breakout, you have volume confirmation. That's a real breakout. Two things: the candle has to be small and the volume has to be great. Okay, so the candle has to be small, but the volume has to be above moving average and it has to stand out. How is this candle? Look at this candle. Do you see the size difference between this and this? Right? How about this candle right here? Look at the volume of this candle. It's a big candle, but there's not volume here. Now look at this tiny little doji candle right here, where you have your blue dot just before that. And look at the volume sticking its head above the moving average. And look at the prior volume. This is not the bottom. The bottom was right here, this wick. The next bottom was right here. This is a fake out of all fake outs that you can have, because it just doesn't make any sense here. So okay, it went up, but you just had to wait a little bit and say, because if this is a breakout, how would you measure this pattern? Well, you would measure this as your base resting here and here. So if it's a breakout, it would probably rest and go very slowly here until we have that spike that we sell into, and then it will have a reversal. So you're looking at this, you're like, okay, I've got literally like 2K distance from where I could potentially get in, and all I need is a 5-pointer. So $500 later, I will be out, and I'm very happy. Now the problem with the setup that TXELU, our trader, shared there is that they saw a GPS dot as a reference point and saying that, oh, bullish sign. You remember what I told you about the blue dots? As a matter of fact, let's go to Armageddon. Let's go to inputs. Let's go to this tooltip. When you go over here and click on it, it will show you, it will give you a note. Let's read this together. It says the short and long dots represent a MAX 7 setup, but are not required for one to be valid. They're used to setup alerts only. Just because you see one, this is not MarketSpy for like other indicators. Just because you see that, we understand how to execute on these signals, and it's not when it shows up you go long and then you wonder why you're out. Second mistake on that setup they did was they trusted this breakout volume, which, look at this candle compared to all the other candles in this range. Does this look real? Too good to be true, right? Because it is. It's too good to be true. It's not real. This candle is not real. All right, none of it is real. These smaller ones, the ones where you're like, I don't know. Yeah, you know, because these are the candles you want to be buying. Tiny little wicks, steady volume, momentum is going up, creeping up, some development here on VBS. All right, buy it. It goes up, sell it. Volume increase means there's liquidity, there's your exit chance. That means no matter what limit you put, it is likely to get hit. It is likely to get hit on your 5 ATR, 15 ATR, 30 ATR, 1 hour ATR is going to get absorbed because there's liquidity for you to exit those contracts. You don't need to hold on to them. Second mistake he did was he trusted the volume, which when the volume goes up, we sell. When the volume accelerates and goes down, we buy. All right, and how we buy, how we execute, how we average out, and to what magnetized area the price can really go, is a whole different science altogether. That is something that we must step back and say, okay, first candle, I'm gonna skip it. Second, third, and are we getting close to any level of significance? Yes. You look in the platoon, you see my setup, and you're like, yeah, makes sense. By that time, this should probably curve up. And we've been dumping for 8 hours. CR says 8 hour. That's about how long each one of these range consolidations is. Let's check it. From here to here. There's your 8 hours. Now we're looking at a 1 hour time frame. Literally, right, 8 to 9 hours. It's not exactly, but in the ballpark, in that area, right? So and then the next 8 hours sideways or up, and then the next 8 hours from here down to here, and then the next 8 hours from here to to here. You see what I mean? So in those 8 hours, you have 2 green or red or sideways candles that you can trade, 4-hour candles. To use those candles and visualize them on any of the time frames that you're on, use candle plot MTF so that you don't get lost in the noise of analyzing your 5 or 15 thinking that something's real going on. Look at that, 2 candles, take it, 2 candles, take it, 2 candles, take it, 1, 2, break down, 1, 2 candles, take it, 1, take it. This next candle right here, we have a trade, it's already complete, but I think it's gonna go up to this level. Take it, because the next few candles will most likely be red, or they're going to go sideways or something along those lines. So that is something that we must be aware of at all times, so that we don't just rely on the indicator and make things up, because we don't have those rules that state that a high probability setup can occur after the fact. So to look, you look back and you say, have we been going up? Yeah. Now if we've been going up and you had bullish blue dot setups at the bottom of that range after a dump over here and to this, by the way, there's another vortex. Look how well it's held its own. Here's a vortex, 1, 2, 3 points, 4, 5, 6, 7. It's a beautiful thing to have a vortex like this that you can trade. But and then after all of this, you look at these like higher low, higher low, higher low, higher low, higher low, and it just keeps on going forever. And finally here you get a blue dot. Now what does that tell you? You get a fat GPS dot right here, for example, when candle drop. What does that tell you? It tells you you're about to get screwed if you go long, where most people are exiting based on the volume that is showing up at the top of just over here. Look at the spikes of bullish white candles on the volume. What do you see? You see absolute tops. You don't need an indicator for this. You see absolute tops. Look at that, with the exception here. So we have a sell volume. The biggest volume sell is right here at the bottom again. The next tiny little candle in 1 hour has pretty much the same volume as most of all these other sell volumes. That means it's over. People sold. They all sold. Now this volume increased above the moving average. It's telling us smart money is always buying the dip. So we blend in and we buy. If we have some algorithmic setup here that tells us we're likely to also continue to move in the direction of where the volume is pushing, where the interest is coming in. I don't need to look at order books, even though it's derivatives volume. These guys are doing all the work for us. The guys on Twitter, the guys on YouTube who are over analyzing and have like 20,000 different screens and tabs open at the same time. They're looking at volume, they're looking at order books, they're paying subscriptions for X-ray vision, you know, levels and stuff like that, glass node, schmass node, whatever. And they think that their human mind can keep track of all that data. Meanwhile, it's difficult to follow a momentum line here and to understand are we going up or down. So I say an efficient trader, efficiency means in code or anything else where least amount of work provides, so your input and output is not equal. All right, so what you put in, you get twice as much out. And for us here, the less info we have, the more we can focus. So these little things over here are really great to start with, because this makes you understand, have we bottomed out or not on the intraday chart. And if you go back and visualize this, now this is different. We're talking about a dump finding the bottom. So we look at two things: extreme sell volume after the fact. Look at the pivot here. Imagine, tell yourself, selling started here, volume is just coming in here. It's not an acceleration, it's exhaustion. It's people literally freaking out and selling because they think it's going to go lower. The market always does the opposite. countered by a long wick, those are your brothers and sisters here, the bulls. They're on your side. You want to be trading in that direction with them. And then the indicator will catch up. It's not going to tell you go long. It's going to catch up, and it's going to tell you it's going to measure the quality and the longevity of this potential trade that you just got yourself into based on technical analysis. And whatever news comes in, whatever signals like this over here shows up, people go long. You're long from like right over here. So you're long 3 ATR prior, 700 points before the signal shows up, because you know CR told you that when delta is overstretched here, it will snap back. When it snaps back and crosses the zero line, it's already too late. You have a C dot, which is not a trigger to go long. It's a confirmation. So sometimes when we trade in the platoon, you know, we get in on a level, and then suddenly we have like a rush of signals coming in. 2 hour C dot, 1 hour C dot crossing up, 8 hour C dot crossing up. That's how you know you got in on a good level, at a good level that is now going to carry you through. And so while it's happening, you just bought yourself some time to identify your exit. You cannot potentially identify an exit when you get into a position, and some people say plan your trade. That does not mean you say my exit is here, my entry is here, because once you say that your exit is at this line, the line is the master now, and now you're dependent on it. So now it's a game of ego and stubbornness and righteousness that you have to make it to the line no matter what. Otherwise, you're never going to get such an opportunity again, which is a fallacy. You cannot think that. You have to say, look, price generally moves by at least this many points on my ATR indicator built in on MarketSpy here in the bar. I'm going to exit. I'm going to wait for the next setup. Every day, I'm going to wait for one particular thing to happen. Baseline reclaim, which I'll then validate on the algo here to see if I have a MEXC that revolves around that baseline reclaim. If there's one nearby, and I remember this video and I see volume that is relatively flat but is increasing or is steady at the bottom, I'm going to go long. If I have a level, especially. What do I want to see before that? I want to see a spill. I want to see exhaustion. I want to see what most people call confirmation volume. So a lot of the times you will see that people will say there's no volume, there's no confirmation. Prices go up on low vol because no one is trading, no one is selling. As soon as you see volume like this, not only is price going up, but a lot of people who bought here are exiting. So the volume is not really bullish or bearish. There's no such thing. It's just a lot of volume. That means there's a lot of exchange that's happening, but it doesn't tell us that it's bullish. It tells us the opposite. It tells us that this is a liquidity chance event to help us exit our damn positions that we bought that when nobody wanted them. Think of the market and the charts as a stock that is highly undervalued, and when it looks unsexy, when it looks flat and dead and ugly, but there's still momentum, and we have some little tricks and techniques here to see that, oh, okay, it's not ready to go just yet. You want to have a position there in a range like this. When this happens, you want to exit that position. You're not holding it to infinity and beyond. You have generally an idea and predefined level or some sort of a ATR plan that you exit no matter what, and then you don't care if it goes higher or lower. You don't ever regret. You just say, hey, that was a great trade. I made a little bit of money. I'm going to do the same thing tomorrow, because every 8 hours or so, there's a solid setup that lasts 5 to 9 candles in a row. And there are also, in between those hours, there are also ranges that last 1 to 3 candles. For example, like this, 1, 2, 3, and I'm out. I wait, 1, 2, 3, and I'm out. Let's turn MarketSpy on, Armageddon, and look what's happening here at the top. Turn all this off. By the way, it was crazy how it wasn't working yesterday, wiping all this. So 30-minute, what was the setup on that gentleman's chart there? I'm going to specifically review that trade. And like I said, there's no sympathy for when we fudge up. We should get rid of that. We should learn from it, and we should definitely not repeat it. And if you ever catch me saying, "Oh, poor me, I thought this, but that," my rule is 1, 2, 3, 4, 5 candles sideways, and if I'm long and if it's not moving, you have a bad position. If it's moving but it's going against you, you better be getting out of that trade, no matter what, because the spill is coming that's going to take you out. A very basic rule that can take you a long way to becoming a better trader overall. You see a flag over here that especially tells you 1, 2, 3, 4. Yeah, it's not looking good for you. Now, if you went long over here on this candle, 1, you ignored the window. What you should have done is, if this is a baseline reclaim, please remember this. If this is a baseline reclaim, dot, diamond, whatever the hell shows up here, ignore it. You always go on the retest of that reclaim here. So if you put your order right on the damn baseline, right here, if you put your order right here on this flag, this is a captured trade and an opportunity that generated 361 points or so. And it's a daily candle open as well on the 23 fib level. And we know that directionally, we are going to get most likely rejected by these fib levels first. But if we can be sustained below them, we will go lower or higher, depending on which side we're coming from. So you have baseline reclaim. You're shorting on the retest. You don't short on the flag, on the candle, on the C dot, on whatever the funk. You're not doing that. You are dancing around the concept of reclaim, retest, lag. Reclaim, retest, lag. All right, you're dancing around the concepts of windows. Okay, you're stepping back a little bit. You're doing a little capoeira there. You're waiting for this to resolve it, to let the trade come to you. You don't jump and you say there's a dot and there's volume confirmation, and we go. You also look back and say, I could have been long here. I could have been long here. I could have been long here on the pyramid, or I could have been long here, but I wasn't. Why am I going long here? That doesn't make any sense. And if you are going long here, in your mind, guys, I want you to say, risk has increased dramatically. Unsustainable candle, bearish volume. Yes, this is not a bullish volume sign. This is bearish volume on the breakout off of the lows where you could have been, but you weren't. You somehow decided to wait and got into some confirmation. But you have a window here that is most likely going to close, and we might not bounce back, or we might not. But you know that this calls for a pullback towards the EMA. Now, 440 points. If your long was here, you could have made bank right here on this one trade. 400 points, excuse me, that's basically one ATR of all of these candles. Let me measure any one of these. 400 down, about 200, it's even exceeding that. One candle here, about 200. Okay, how about this candle from here to here? 300. Okay, how about this candle, this doji from here to here? 390 candle. You have one ATR to take profit, where you should secure 90% of your profit, put a stop loss, and then manage the rest of your 10% going higher at a risk level that is this high. After the dump, when you witness a dump and this volume increases at the bottom, where all the freaked out people are selling here because there's a panic candle, and then you have one engulfing, and the fact that you know it's going to reverse, and you know we've been dumping for a little while, which means you assess it like this. You say, smart money went short here. They went short here. Yet volume is just showing up here on this candle. I'm buying this. I'm buying the dumb contracts that are getting sold here, and I'm going to turn it into a smart trade to the upside because it is time. Okay? So this is your thought process, and it's universal, okay? And it's here where you pick it up. Cryptopocalypse Now. How you tend to think about these things is very shareable. We can all look and assess this equally because this is how it's done. You never go and find a floor where you have a variety of traders and they all employ different methods. That would be madness. They all move as a unit, as a platoon, in tandem, to analyze and execute. What matters is that we have a universal system with access to it that basically gives us the same results, no matter which angle we're looking. Now, the only thing is levels. Now, the levels are used to measure the distance away from the signal to how far can the price potentially move before a reversal. And we're not talking about scalping, swinging. I'm talking about a reversal where we hit some sort of concrete floor or ceiling that we can bounce away from, because that is going to cause the chart to produce 2 or 3 candles that we can get in on a long or a short at. So those candles are up for the taking. Second thing, if you went long here, and if you didn't take profit, and you have a spill here, this was supposed to go up here. As a result, it will now, because it failed the first time. So it's going to surprise people and suddenly go up. I'll show you how that works and why you can rely on this. Now, second of all, there was a divergence here. On the 5-minute, oscillator was going up, and on the 15-minute, there was a divergence, but it didn't play out. We had a stop sign here that told us end of a trend, and I don't know, something happened, China, something, you know, mining, news, this and that. I want you, ladies and gentlemen, find me the dumb money here, the non-cryptopocalypse now philosophy money. Find me the guys from whatever camp here on these volume bars, not by looking at any levels or indicators. Let's turn everything off. Just find it. You see anything that stands out here? Well, I can see the biggest sell volume where the majority have decided that this is a dump, are going short here at the very bottom into support level. Let's turn on DSR as if our vortex was not enough. Guess where we are? S3. Do you know what the purple line is? That's an investor tool. This is for spot traders that want to buy value and hold it for a little bit. It's a very strong Fibonacci derived moving average multiplier. We have the orb bouncing away from it. So we have all these things happening, right? And yet the biggest candle here is a short. Now this could be market makers. This could be market makers unloading unwinding some of the positions, or taking profits actually from this dump. By accelerating the price a little lower, they can push it and find an exit, because people are going to be freaking out, pushing it down, and they can start buying. And when they buy, very few participants are identified here. Now you have a volume bar right here. Please analyze the volume bar. What do you see? What is so special about this bar? It's a hammer, right? Your basic pattern that is basically a bullish candle. Second, it's 1, 2, 3, 4th divergence candle. Second, it has volume at the bottom of a dump, not at the top. Confirmation. I'm going to go long because it's finally confirmed, but I'm going to ignore all the pivots that I missed. I didn't get in here, didn't get in here, didn't get in here. When this spikes now and goes up to this yellow level, you're going to long and going to get stuck in there for days on end, and then when it finally is going to dump and not going to continue, and you're going to look back and say, well, I should have been long here, but I wasn't for some reason. I don't know. So this video is for you, and I hope we remember these things in the future. Volume increasing from the bottom of a dump, that's your confirmation. It usually happens right after we have all the dumb money exiting, because they held. They're like, yeah, this level didn't hold, I'm selling. Screw this. They sold right on this candle. Now the second part to all of this is, while this is happening, the divergence keeps building and building and building and building until it can no more. For the first time, the difference between us, I'm going to say by the name Cypher, is that these GPS dots don't mean a thing unless we have supporting VVS signs of life, quality of life here. Now MarketSpy picks up on volume and volatility strength, and surprise, it did not call any of it in this divergence here to tell us to go long on this tiny, noisy 15-minute time frame. Yet on the fourth GPS, we have absolute fade, blue, bright blue right here. First time trailing steps, prices above them, bounce, all the confirmations in the world that you need. We turn on Armageddon ME, and this is done very calmly. There's no hurry, I gotta get in on this or it's gonna be too late. What if it pumps right now? Oh, there's none of that. You turn on, you enjoy the process. You turn on Armageddon and you say, got my signal here, got my signal here, got my signal here. What am I gonna do? I'm gonna place my order at the baseline or scale down to the baseline, because what? We always have a retest. We don't just get long here. Sometimes it's necessary to get long in here, but would it make a difference if you went long here and then went long here? And where's your stop? Your stop is right here. Are you actually putting a stop here? No. It's a visual area where you say, look, the support here is good. All right. This is the platoon support. This is the platform that we're sitting on right now. It's really good. But if it starts to like, it's not like it's going to rip through it, because it's support. It can't. So it's going to keep knocking on it. And if it just feels like it's going lower, and this divergence like really goes low and breaks something like this, then you're looking at a lower level and you're either averaging out, because the end is near, just not right here right now. But the dump is coming to an end based on all this. Or two, you're cutting the trade and you're out. You're out completely, because now you know that this is not real. But this divergence here, right? VVS here, reclaim here, the stop button, the second one. So this one didn't work. The second one at support should work. And it tells you that we go up when the diamonds disappear. Go to the settings, and it's a reminder that you have your checking this box. We will visualize ATR values, baseline train right here. Ideal entries are close to the baseline where no ATR diamond is present. When the diamond shows up, the train is gone. Price moved too far away from baseline 1, hence the name ATR baseline train. The choo-choo train, diamond disappears right here. Number 1, it's a jackrabbit reversal pyramid because it's above baseline 1, not below it. Number 2, we are at the bottom of the range after the dump. Number 3, we had an attempt and we failed, and as a result printed a more bullish divergence. Number 4, we go long because it's a reclaim and we go long on a retest. But if you went long here, you should take profit on the first sign of resistance and wait for a second chance. Double kill. Props to you if you were able to go long here, take profit here at resistance, go long here again, take profit here at resistance, and now you're riding your 10%. Double kill. Props to you if you did that. Looking at the indicator here on MSX, the algo shows you that it was able to identify periods of strength and confirmation for price to continue. The harder we fall, the more likely that we are going to reach unbelievable levels where people will say, how the hell does it reverse and erase all the gains that shorts are enjoying right now? And if these guys don't take profits soon, we're going to catch up to them, up to this level, and just blow everyone's minds away. And don't be surprised. And if you have MarketSpy, you should have no excuse to be surprised, because right now, guess what? We have a purple line baseline reclaim. What's going to happen is that this price is going to most likely dip into this area. And if it does, we'll have more juice to squeeze to the upside, or it just goes straight up from here. I don't know. The freedom here is that we played the setup. We exited right here at 61.5, about there, half. And we have a remainder here that I scale in and open, and it's up by 3 points. And I don't know where this is going to go. This is my runner. It's going to continue to stay here. I might add to it later, but it's late. We're in the middle of discussion. This whole trade setup from here to here took patience. You needed to be nearby and aware for 9 hours. So you had to plan your day and do things in the period of 9 hours. Periodically checking your phone to see if we made that level. Now, once we made that level, you go to your Discord, you go inside of the platoon, you see me talking about it, saying time to go long, that we have made the target, and a 3-day-old target that is also a 3-day-old consolidation. And now we can finally place an order even before the reclaim happens. This is a bit more advanced. This is something that this is some matrix stuff that you have to do and kind of stay ahead of the price action a little bit and look at volume and see where the traders. This is my order book right here. I don't care if it's derivatives. As a matter of fact, good, because derivatives is what has been driving the markets lately for a while now. Actually, it's not really spot. And these liquidations, the only way to liquidate people using these options, contracts, futures, swaps is if you reverse price enough to at least get those 10x and 15x guys, at least. So that's coming. We're gonna have those moves where 15xers and 5xers are gonna get it. Now, in terms of leverage, I've heard someone say, I've only used 10% of my account, so it's not much. I personally think that, I don't know where you picked it up, but you better get rid of that habit before it's too late and it's going to eat you up. And you're going to step on a whale mine, is what we call it. You're going to pull the rug from under you, and 2-3 trades good. The problem is that if you lose, you're going to be grinding for the next 2 months to make that money back with little tiny gains that are going to feel like everything is pointless. What's the point of wasting my time doing this? Okay. And that's also going to have a mental impact on your head. So on your mind. Spencer, 10% of my Bitcoin account, not my overall money. Sure, everyone has their own sort of, let's say you have $1 million, but you only put 100K in your account, and you're using only 10% of that 100K. I personally think that that's nothing. That's still a lot. 10% of 100K. As a matter of fact, the more you have in your account, the more difficult it gets with trade executions, and risk increases significantly. But for a small account, I don't know. Now, we also have isolated, not cross, but we're going to have a masterclass on why cross leverage is superior, and how we actually did 2 of those already, Spencer. Here we're very in depth And I believe some of our traders were like, whoa, I didn't look at it that way. And we did the math and we looked at it and exemplified on the charts and showed it in practice. And it was there's a whole thing to how these exchanges are structured around these isolated, protect yourself, be smart kind of, and don't use floating leverage. Lose a little bit over time. It's good for them. They don't want to liquidate you right away. They want to keep chipping away at the longer you stay with them, the better. So there's no fun in killing someone instantly. They'll take their time. Death by 1,000 cuts is how it's known in the finance markets for traders that experience this. They would tell you firsthand that it happens like this. Not much, but you keep throwing on it a little bit, a little bit, a little bit. So, but the good thing is we can learn those things and trade more efficiently by doing everything to the contrary of everything that's ever been suggested on the internet ever. I'll tell you what, guys who actually work on floors, they don't really have time. Some of them, they have hobbies. They start their channels and yes, they start teaching and stuff like that. But the majority of them, there's stuff that they do and that they know that they can't really share. They have no incentive to, not willing, and don't have any personal agendas or vendettas against their bosses and companies that perhaps may or may have not screwed them over, like Goldman Sachs or whatever. I know a lot of Goldman Sachs employees who come out and then it takes years for them to start sharing things. But once the NDAs expire and everything, and they don't hold any other agreements, they can freely start talking about stuff that is really mind-blowing that retail literally has no access to. And it's not the stuff that's in the books. People make fun of that stuff on the field in the industry, but you know, these things like isolated margin, for example, has literally zero benefit to you as a trader, and only benefits the exchange. And yes, I do have a video on that recorded, but it was late, I was tired, so it was a lot of and I wasn't really sure about what I wanted to get across 100%. So we had two of those classes, and one was really good, and those people who were around, I think they picked up on it, and they have been using those principles in their trading since, and it's helped them a great deal. Actually, if you type cross leverage here in the search bar on Discord, you will see the discussions from those sessions, and you'll see what I mean. But other than that, we're going to learn the best practices for risk management and allocation here. That should be number one. That should be the priority. Then should be the levels and methods to identify those levels, and volume analysis to see where the majority of traders are transacting and how. Are they late? Are they early? So huge volume bars at the top of the move, and it's basically visually, how do you know if it's the top? Just look at the low and the high, and have we been going up? Do we have a small sell candle here and here, and volume is increasing? Yeah, that's a bearish sign. We're going down. That's a short signal. Are we selling into the bottom? Have we been dumping for the past 9 hours minimum? Is volume suddenly increasing and there's like a spill scary candle? Buy it. Instantly buy it to get in on these wicks like this. Instantly buy it. Overlay with Armageddon. Add MarketSpy X to the mix and see what you just bought is actually going to just going to get confirmed, because you're going to see confluence right away. You're going to see what is happening there on your chart with all this. This is very powerful stuff, and it's different from people telling you breakout, volume confirmation, go long. No, breakout, volume confirmation, start selling your contracts because you should have been long already. Breakdown, and you have volume confirmation. Wait a few candles, because when a sell-off happens, it's usually very swift, and it has these last knee-jerk reactions where you're just like a couple of seizures, so to say, of the price, where it's like right before it's about to croak, is gonna have like these moves that are just like, it's like squeezing a lemon, and then you just give it the one last squeeze just to get the last few drops out, and this is what it is. And that's when you buy. You want to buy these last few drops of exhaustion that is going to look scary, most likely print a divergence, and these signals are very reliable then. They're amplified on MarketSpy. And always assume that the first signal that you get is a fake out. The second one is solid. The first reclaim you get, wait, there's a chance to get picked up. Now that's not always true. Sometimes you're gonna have a reclaim and it's just gonna go on and on and on, and you're like, damn it, there's not a single dip. So what do? You will have those situations as well. So your leverage should be in the single digits only, and not even like 5 is you're going overboard with that. What I mean single digits is you get to 1 and you stick with it. Now you can trade with 1 leverage, 1x, and have double and triple digit gains every day. And the thing is, your risk is minimized that way, but it's consistent because you have a great system in your hands. Now, you can absolutely ignore all this and go crazy and leverage it up. And you may have the skill for that. You may have that risk attitude where you're like, okay, I know, I can handle. Who knows what your financial situation is like. But let me just assume that if you lose your account and what you have, then you cannot trade tomorrow. If that's your kind of situation, 100% that then it's game over. Then you can't afford to go over 1x leverage at any given point. And if you're just starting, you should be on testnet or using very, very low leverage. So small to medium size accounts, higher leverage. So you can go up to 9 max. Okay, and that is within a range on a quick in and out candle, directionally correct candle. So if you went 9x leverage here and exited here, by all means. If you're doing a reversal before the signal occurs, and if your account is a little bigger, then to get the same result that a 9x leverage smaller account would need to 9x it, you'll only need to 0.09 exit to get that same sort of result from it. If you have, let's say, like 100 bitcoins or whatever your case may be, I don't know, you'll need 0.01x and you're set to perform just as good and as the rest. For others, they need to take risk. But like I said, we're trading a universal system, which the input, the research that we put in, and the stuff that we look at, the output is equally rewarding for all of us in terms of in and out every day for consistency. There should never be a situation where we go long. You need to train yourself to not trade for periods of 8 hours. 8 hours looking for a setup, entry, a 4-hour session that you're managing. So like from here to here, that's 5 hours of your time. Now, sure, you can put a stop loss here and walk away, but I don't know if it's a good idea. It's like automating your day job if you have one that requires you to be at a certain place, and you just put like a dummy robot plastic doll there for example, right? And the boss walks by and looks at your office desk, and you're like, "Hey, Pete, how you doing?" And the dollar's just sitting there, and you automated your presence there. I think that's what a stop loss is. But I think it's better if you manage it actively, not fiddle with it, but manage it and monitor it from your phone remotely, or if you're at your computer, from your entry to your exit, which should take about 4 hours of you being nearby and sort of like keeping an eye on it. And you can get in, watch a movie, close your position, and that's your trade. So there's that aspect to it. But you have to feel and do some evaluations. But let me just say that if you ever have the urge or the need to look at the liquidation point, then you're doing something wrong, because that should not even be a concern. It should be like that question is not to be answered. Like, liquidation. What's your liquidation price? It should not be part of your calculation at all, unless you're doing some advanced hedging or something. That should not even be part of it. Your stop should be used all the time, and the risk pane exists for that matter, where you can assess how many contracts you can put up per trade at any given time, how much you're allowed to trade with, if you're willing to lose this and that. So you sign an agreement, almost a virtual agreement between you yourself and Bybit's, what's it called, automated risk pane there, because it will show you a couple of things that may really surprise you, because as you play with the numbers, the reality hits you, and you understand that just like anything in life, it takes money to make money. Proportionally, it's all the same everywhere. And I was watching this interview. Don't take it from me. There's this gentleman, and his name is Sam Bankman-Fried, I think, and he's the CEO of this exchange called FTX. I was interested in it because he was doing something similar that I was engaged in the last few weeks, which is an arbitrage play where Bitcoin is more expensive in other countries. And anyway, he was talking about that on the Pomp podcast or something, and he's got a lot of great guests. And one of the things that really struck me is that he talked about risk and trading in general, and he said anything that you do in life where you stress the system, where you put it under pressure, it eventually breaks. And that means sizing up your trades. He talked about blending in the books as a market maker, and how are you able to trade the markets without moving the price too much, because that's not good for you if you're a really efficient trader. And even if your account is small, you learn how to blend in and do things that are just you're just not on the radar of exchanges, of counterparties, of other traders. You're just not there. You're literally blending in the most smartest areas of your chart that no one can really see, or it's very, very damn close to, if you follow these things here. And so he talked about how he had to learn that no matter what you do, when you want to move $1 million from one bank to another, you're suddenly hit with issues where things just break. Even though they promise you that there's an unlimited deposit amount, suddenly it's like, oh, we didn't expect you would be extracting $1 million out of this country that has certain limits. You have an unlimited deposit account, but at the same time, now that you actually deposited, we're going to freeze it because no one really deposits that much at one time. So we need to do a whole bunch of, so there's always something that breaks. And when he talked about trading, it really stuck with me because I recognized it. He said, you do anything, put any stress on anything, it's going to break and you're going to pay the price. And he was talking about sizing up your trades. You do it once, genius. 3 times, genius. Invested in Dogecoin. Wow, millionaire, genius. Then you're going to repeat that process and the timing will be different. And you're going to lose it all. And the markets, they take the most brilliant people and they smash them into the ground daily. True or false? Wall Street, anything, even retail platforms today that are not as sophisticated as some of the other systems. But in terms of what the market does, so we need to understand that you can't make $1 million without moving the market, without putting in 1% of your whole net worth, and 1% of that whole net worth in Bitcoin, and 1% of that as your initial trade. That's just like you're looking at a couple of $100 million in order to be able to do that. There's no leverage needed. Now, for a smaller account, the difference is none. There's no difference. You just have to know that your expectations of, let's say you watch crypto phase and like $1 million. First of all, it's not $1 million, it's 1 million contracts. Borrowed money, you don't have it. It's collateralized, you know, it's a perpetual swap, and it's not $1 million Bitcoin bet. Leave that for Michael Saylor and them guys. You're trading contracts with 2 Bitcoins per account that's most likely somewhere down the road is going to get blown, and you have an infinite number of them you can create. Now, guys like that, they can allow to do so because they have sponsorships, they have commissions, and a whole bunch of other crap that's happening there that replenishes their losing trades again and again and again. You never hear about it. You have this one account and you look at them and you say, damn, I can also make some money. And suddenly trading becomes this game of, what do they call it these days? Degen trading. That's not a joke. You're putting your, unless you have no respect for your money, then I think we should treat it a bit more seriously than that. Because this is the kind of thing that can sustain you and feed you for the rest of your life. Whether you do it here, somewhere else, on your own, you learn it properly, consistently, and then you, at one point, let's just say there's this person who works an office job, and let's say he gets paid, I don't know, like $50K a year. Now let's say $50K he got paid and he's tired of that job, but he's learned trading and he's really good at that. And $50K today can buy you 1 Bitcoin. And with 1 Bitcoin at 1x leverage, assuming you have a setup every day, that moves by about $300 to $400, such as this setup right here, or short here, or long here. And let's say you rarely lose or you never get stopped out, and you're always entering here and exiting later here. Or you're sizing up 10x, entering here and exiting here, right here. Now let's say you bought 1 Bitcoin with that $50K, and that's your working balance. Your main job and priority now is not to lose that money, but to grow it. Meaning you can't risk it, meaning you can't leverage up, but you're using 1x. Now with 1 Bitcoin, which is worth just slightly less than that, 50K, you can make $500 every day. If you have the time for it and you're willing to commit. If you multiply $500 by 30, what are you looking at a month? Month-to-month basis, 15K, okay. You multiply that per year and you work like Sam Bankman Fried there, who sleeps on the floor next to his computer, and he's a multi-billionaire with 10 billion worth of assets under management in his Alameda research firm. And if you do that, you're making more than your previous job that paid you 50K a year. But you had to unlearn everything you watched on YouTube. You had to be here to learn all of these concepts that I'm sharing with you here. You had to realize that realistic trading is just that. It's just like any other job, and there's no advantage to it because it's quite demanding. It's tasking. It's mentally, you have to be sharp. To eat properly, you have to be connected to the chart. And to build that sort of connection, that takes anywhere from 6 to maybe 1 year until you can start finally, realizing things. If you're on your own with the help of a great community like ours, it happens much, much faster. But I have seen people that are not patient. They cannot be patient for 2 weeks, and they say, I've had it for 2 weeks, I still don't understand. This is trading, guys. This is financial markets. This is the hardest job in the world. What are your expectations looking at those gamblers online, thinking that visualizing numbers, visualizing places you've never been to, wanting to be there, a lifestyle trader where you sit on a hammock on your laptop clicking buttons and magically you're a swing trader where you don't even have to look at the computer. They all promise you this. They say, do not need to be in the front of the computer. Join our community because da 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 da. They're selling you dreams. Now, what I'm telling you here is you grind like this every day and you add 0.1, 0.25, 1% to your account, and you're doing just as good as some of the top trading legends in the world who yield 20% a year managing their assets on behalf of their clients and themselves. And that will put you on the legendary books if you're that 20% a year guy. Believe it or not. Now, if you can understand this, then you will never make mistakes such as longing the top here, selling volume and joining the rest and joining hands with all these panic guys here. You will do the opposite. You will enter and you will exit at the first sign of resistance. You will allow your 10% to run. You will rescale and reposition your orders. You will draw your levels. You will do some homework. You will never FOMO in. And then you achieve consistency. And you never have any targets to make that $500. That's an example. But you always look back. And you look back and you say, I did pretty well this month. So that is realistic. So having said that, how much do you size per trade? And that becomes very individual. How much is your working capital? How much did you put in? Generally, the more you have, the less you need, because you can generate the same $500 per day using a little bit of less leverage if the account is well funded, or if you can have your 5 Bitcoin plus account that is going to also give you that, but now you need to suddenly add a bit more than usual in terms of your leverage, while at the same time looking for setups that are more so they require your attention. They demand that you monitor them and that you manage them using everything that you know. And so it's not a part-time thing now. Think of it as a baby. The smaller it is, the more you have to spend time teaching it, spending time with it, entertaining it, growing it. And once it's a grown-up dude or dudess or whatever, then they can walk on their own. It's like money makes money. Then you have an account that's a couple of mil, for example, right? And you're still doing the same thing, but now it's compounded over the years. You look back and you're like, best thing I ever did was play by the rules. I have a system that is able to perform and give me the same consistent results for the rest of my days. All right, now you just eradicated all the FOMO. You completely got rid of all the illusionary scenarios in your head presented by countless and countless of these traders that's their bread and butter, basically, to convince you that things are easy and you don't need much. What you need to do is sign up with me right there. Use my link, and remember, this is only for professionals, guys. Spider webs, snake eyes. Trading just got easier. Case in point, size up so that liquidation is not a question. And number two, always say, what if price drops by 20K on the next candle? Will I survive? And if I survive, how much am I going to lose? And how much am I going to make back on the next round, given that I'll probably have less margin now and it's going to take some time. The losing happens fast. The recovery is a long process. So that will tell you. Then you go to the risk pane. You get a feel for what you can and cannot do. You look at the levels. And if you have confidence in the levels, when it comes to trading, enough of philosophy. When it comes to trading, 2, 3 candles, 5 candles later, if it's not working, you're doing something wrong. Exit. How do you exit? Do you press market sell instantly? No. You can exit on a limit, just patiently fill while you're in the minus, or you can scale out and ladder out and minimize your loss by getting a best stop loss price this way. So there are a variety of techniques, and we will continue to explore them and talk about them here so that we never run into situations where we hold on to our losers or we oversize. Now, also, one of our traders here said that there are hard races when price drops. I don't know, maybe that's what they said. Don't quote me on that. But they said basically like every single move makes them feel uncomfortable. That's a sizing problem. That's not understanding your level. And so all you had to do is ask, and one of us would probably help you along the way and say, well, this looks like a good level, so hold it and you'll be okay. This is an exit. This is a re-entry, this and that, this and that. And so we can help each other here to but remember, it's never financial advice. I will tell you, I would rather exit early than late, and I'd rather enter later than early. So switch those around. So you want to be in, but you can wait a little bit. So for example, yeah, you want to be in, but wait, later you're in. Delayed gratification. You want to sell, nice fat little candle. You sell here, you don't have to worry about all of this. All of this going up, down, up, down, up, down. Damn, is it going up? Is it going up? Am I adding on the flag? Am I doing, you know, it's done for. And you sit back and you start planning and looking at the macro and the next trade setup and say, okay, from this point, where are we going? How far can I expect it to go? What happens once we get there? So that's it's 3D chess. So you're thinking, okay, if it moves up there, what's my plan from that point? And if it drops, what's my plan from that point? Not from where it is right now, because where it is right now is most likely a very bad entry. I guarantee you that. Where you don't want to enter, and it looks like it's set up for you to go long, but you're not sure. These are all echoes and demons of the past from previous experiences and other systems that prevent you from pulling that trigger. And that sometimes leads us to start looking for bots. I can tell you right now, there's not a single bot system in the world that's available to retail right now that has alpha or an edge. It's just a random probability. Overall, long term, your account goes to 0. Although it may seem like, oh, nice trades, because you get that feeling of like, wow, it actually traded, entered, and exited. There's no one that can compound and guarantee the diminishing results will be there, and eventually you will see that it starts out great, just like a casino. Market dynamics shift. The bots cannot see that. They act on the same signals all the time. They don't understand equilibriums. They don't understand the positioning of price location and its behavior under certain stress points, such as the EQ3 over here, for example. And they start acting on these very poorly designed algorithms that are just don't do it, right? Automation, like I said, you want to be there for a trade. You want to do it part-time, but you want to spend a weekend with it at least every week. and then things will really start going your way, because once you kind of familiarize yourself with this and train your eyes, it becomes very easy. Start with three points right here. Volume at the bottom, long signal. Volume at the top, short signal. Opposite of. So if it's going down and it goes down, there's volume bar at the bottom, you buy. If it starts to go up and there's barely any volume, you go long. As soon as volume comes in later, arguably this one right here, but this is okay. We'll have one more. It's going to come in. You want to be out of that. When we finally have volume coming in at a key level, you want to be out of that. Do the opposite, or even in some cases, shorting. In regards to shorting, if you guys want to save and increase your win rate by a whooping 80%, stop shorting altogether. Wait for the setup to come your way. Let the shorters push the price towards you so you can counter it with a long. Do not short because you're not as fast as the panic and fear of people. Greed is slow, crawling, unstoppable, keeps going up, and it just looks ridiculous. It's like, when is this going to end? Shorts, very swift, panic, and then it was like, oh damn, I shouldn't have sold. Everyone starts buying and it's over. You have an instant wick reversal, and you rarely get these prolonged consolidations, corrections to the downside. More like something like a candle here, and you go short. So there's a whole art to this. Do not consider it unless you know what you're doing and you've been doing it for a while. I'm strictly referring to people who have just discovered TradingView a few months ago. Please do not short, because when you join any one of these exchanges or watch those YouTubers, the first thing they say, a tutorial how to short Bitcoin. They want you to short the greatest, most bullish asset in the world. That is just not mentally correct thing to do. If you're starting out, you are not familiar with it, Bitcoin will destroy you if you short. You do not understand volatility. You need to stay away from that idea altogether. Find the setups that are long, and once you understand them, you will flip those setups. Advanced shorting techniques become unlocked by understanding how to long, and suddenly you realize that shorting and longing is the same principle, is the same signal. It's just an inverse execution. The mentality around it is the same, and it doesn't matter if it's the most globally bullish asset. Intraday corrections and the ATR values correspond and correlate to one another. What goes up must go down. You start to see that, and you say, yes, I know what to do. I know there's a reclaim, there's a retest. I'm going to go short in this area because X, Y, and Z. But most of the times you're staying away. You're waiting for them to unload their bags so you can counter them and buy contracts to sell later when they realize. Because traders, what they do is they sell, and the next day they realize that was a mistake, or their realization happens so fast it's literally on the next candle, and price reverses instantly. Like volatility kicks through the door, and it's like boom. That realization is a candle like this. When it dumps, suddenly like no, and they're like, it's not pushing. Dump. It dumps, stops a little bit. They're like, no. And they start buying in. You know how many people get wrecked market buying and selling on emotion? This is what this is. So just wait until they slaughter each other. Remember, bulls make money, bears make money, pigs get slaughtered. We don't want to be pigs. Means we don't want to be greedy or fearful when there's no reason to. So we buy setups that look bearish, and we buy setups, sell setups that look extremely bullish. Intraday. Our setup here was, I'm gonna jump over to the platoon. We just had this trade, so there's no reason to speculate further. But I say we range and potentially, yeah, it's going to take a while. The setups that we have are simply they're good. They're good every day we have. Well, I wouldn't say every day, but we have one or two. By the way, the window here is your second. So when this dropped, jackrabbit, right? Equilibrium zone 3, ladies and gentlemen. So this is where the buyers will step in. Place a limit order here on the jackrabbit or scale in. All the same. Doesn't matter how. You can execute with a ladder. Single limit at the nearest support or resistance. As we take profit, so we enter the positions at the nearest support or resistance. So listen, if you're taking 90% of the nearest support and resistance, go long 10% of your planned at the nearest support and add 90% later once it proves useful. So it's the opposite of what you do when you're exiting your position. So you're adding in 10%. Then if it develops and it's really right and bright, you add another 90% for the 100% ride, and then you exit 90% at the nearest resistance and exit 10% later at much higher levels. We're not there yet to talk about those things just yet, but we have this thing going up to the window, and we closed the window just recently, and that was our target area. Platooners, hopefully you guys get in on that. Now you can rescale because we have a potential dense consolidation here, and we haven't had some sideways action for a while, so I think this is the place where that happens ultimately. But your setups are always the same. Remember, no news, bullish or bearish, can alter any one of these patterns. You look back, like I said, isn't that amazing that we look back and we see a pattern here, and then the news are like Bitcoin spills because of that? No, it's not only because of that. It spills because of the positioning of traders here. Now that information gets exchanged, and maybe they use it as a catalyst to move the price and say, okay, now do it now. But trading news is another way to wreck yourself, to wreck city, direct to wrecked city. You don't want to be part of that group that speculates on events, news, and developments of this asset. Top, bottom, I don't know. We don't know. But these signals, they never change. That's all I know. And they'll be continually presenting you with opportunities that you can trade and take advantage of, whether you're ranging or dropping. I mean, look at it, right? But you had to wait in between, so you can wait out the consolidations, or if in progress, you can wait for the next pivot floor or ceiling to get to before the next setup. So remember these points about volume, about baseline reclaims, about how this is not a reclaim. You see this is not a reclaim right now. This is going to fail. This is not a good baseline reclaim. This is going to go sideways, maybe go up slightly. If this goes up here, we'll have a baseline reclaim. We'll know this is real. But right now, it's just too sudden. I wouldn't trust it. We're gonna have a lot of sideways movement here. Not real. So when you see something like this that's not as clean and it's an hourly chart, what do you do with this information? You know what I do? I skip. And I say, okay, I am definitely not waiting. And nothing is going to change. It's a 1 hour time frame. What is going to change in the next 2-3 candles? Nothing. But what will change is on the 4 hour candle open, we will have enough information to work with to see that maybe we have like some squeeze here developing. Maybe if we fall down below here and go here, maybe we'll have finally something to work with. Maybe it'll be a split chart and we'll be inside this channel, and maybe a breakout happens here in like 6 to 8 hours. Yeah, I will trade this. I don't have to be in on this now. So there's a lot of things that are setting up right now, and if you don't see it, don't force it. Just because there's a dot or whatever shows up, no. unless you're following the rules, pyramids or some sort of setup that we have discussed, and it's one of the strategies. For a punch out, you have to wait for a green candle and get filled. There's no choice. For something like a jackrabbit, you have to wait for a pyramid and execute on that. And remember, at the bottom or inside of a range, they're the best. They're the best. And market enemy, we just had one fill, so the chances of this going lower for market enemy type 2 down to these levels is low, but possible. Probable, not, maybe not. So these are the kind of things that you're in constant synchronization with. The understanding here that what's the next magnet if this is not it? If this goes down, let's say this drops by one daily candle, so one more red candle. This number 2,800 slightly exceeds the daily ATR, but it's possible. We will have L1, L2. Do we have support here? Absolutely. Weekly, CP, TC, BC, that has not been touched. Well, it has been here, but it can touch it one more time. It can overextend, close the gap, take out the shorts over here. Sorry, the longs, starting from this wick down to this wick. How good is that wick? Is that a good wick? The extension shows that we can go lower down to here. If we go down to here, we're damn sure to overextend down to here. So this is the value line. Bitcoin will probably get appreciated at somewhere around this level. What's this? That's our prior platoon setup. Remember this? Trading this possible pause here. This pause brought us all the way here. It was a simple divergence here between these two. We already talked about this setup. Baseline reclaim, continuation, pump, consolidation, pump. And yeah, we can go down to here, to this EQ sort of value line down to here, retest the top of this channel. Is it possible that we go and retest it here? Yeah. Is this a massive head and shoulder printing? No. Is it a double top? It was over here, but not like this. So there are a lot of things that can happen here. But are you ready if price drops down? And what's your strategy? Are you adding a little bit here? I would say that if you feel that you're bullish and you want to go up, you have a few contracts here directionally, then you play it level to level, signal to signal. And don't forget to take profit and you'll be golden. So that's it. Thank you for watching, and this is the end of the video. For those who want to review some of these points later, sorry for ranting for so long, but I think that we need to talk about these things from time to time so that we have an understanding and a realistic expectation. It's just that we've been not been expecting so many people that are completely new to trading, which is exciting. And MarketSpy is probably the best way to start your journey, but it is a journey, and most people think it's like some bullet train from Tokyo to Osaka or something. It takes a couple of hours and the frustration kicks in if you don't get it the first day or the second week, which it takes time. It takes time, and you have that time. Don't worry. You're going to justify your investment and everything else if you do things properly, because your actual presence here and going through all this is in itself a building of character and patience, and it adds texture to your style of trading that you may not realize now, but eventually you're going to add all of this up and it'll be part of you, and then you'll have your own things that you may notice that some other people have not discovered before. That becomes your ultimate secret edge, and hopefully you remember Cryptopocalypse now in good faith. So thanks for watching, and we're going to turn this video off. Please review one more time, especially about leverage and the volume information that you need to be aware of. Please backtest, look at the volume spikes, see where the tops occur, what happens, who sells at the bottom of the ranges, when, how it correlates to your UTC time, universal time, and also sessions. Who's buying and who's selling? Is it London, New York, Tokyo. All right, have fun. That is all.